Yeah, so good evening, everyone. Welcome to this tutorial from the Man Brokerage Services. Yeah, so this is going to be a whole entire series of a number of videos, basically decimating the whole concept of Forex trading right from the beginner all the way through the intermediate and to the advanced uh, level. So we are committed to generally give all our clients the very best, of education services per se, through decimating all this information to the easiest tidbits, like breaking each and everything down to the simplest terms so that you can be positioned to understand whatever the foreign exchange market is. You get to have a skill set within forex trading. You can be positioned to choose within various instruments traded within the foreign exchange market, so that you can be positioned to trade and make money. If you don't have a TBS account opened up as yet, I feel like this is the time that you should get straight onto that journey. Open up your account so that you can have something to trade with, you know, because all the info that we're going to be giving out here is nothing else but the very best, honestly, you know. And the proof is not superimposed, you know. You could always go out there and then try out these things, back test them. Some of the trading softwares we use, for instance, TradingView gives you that opportunity. You can back test a certain strategy, and you can be positioned to identify as to whether price actually does whatever we're going to be talking about in here, you know. Yeah, with backtesting, you may not necessarily have the overall emotions, coming into play since it won't be the actual live market, but with the whole overall skill set side of things, you're going to be improving day by day. Yeah, so without further ado, I think it's best if we dive into the overall breakdown. So, to begin with, as you'll see the title for trading, we just want to get to be in position to understand whatever forex trading is, from the grassroots, from the very beginner basics, in that even some of you guys that already have like an idea or whatever, this video is intended to kind of like help you be in position to understand the key core concepts of forex. In that, if you have those core concepts, it doesn't matter whatever level you're at, you're going to be in position to utilize them and be in position to make money. Okay, so as we dive in, so getting started, what are some of the things that we're going to be looking at? Yeah, we'll be looking into whatever Forex is. So what is Forex? Have to understand the overall definition, be in position to break it down to the smallest of things, to fully be understood by anyone else that's going to be watching this video. Then we'll be looking into the major instruments traded. We'll be, discussing as to how currency pairs definitely work. So if we are to proceed to the very first one, which is what is Forex. So if someone comes out to you and asks what is Forex, you've been on YouTube, you've been over the TV, you saw someone speaking about Forex, you really know what it means. You're within a group of people, they're having this conversation and they're talking about Forex. What do you get to understand by Forex? So Forex with the foreign exchange market, just to give an overall definition, the foreign exchange market is a global decentralized or over-the-counter market for the trading of currencies, as you can see out here. Okay, for the trading of currencies, it's a global, over-the-counter kind of market, or basically the trading of currencies. Out here, we're specifying for the trading of currencies, but currencies are not the only instruments that we get to trade. You get, so maybe to break down some of these things, uh, the major key things to take out of this is that the overall concept is talking about something that's entirely global. By being global, it's all over the entire world. It's global, it's decentralized. So it's global, it's decentralized, then it is also an over the counter kind of market. So it is over the counter, or what some people may refer to as OTC. So the foreign exchange market is a globally centralized over the counter kind of market within which we get to deal with to, exchange various currencies or trade various currencies. Okay. So it being global, we've understood it is all over the entire world, you know. Then understanding that it's decentralized, with this basically what you're trying to mean is that there's entirely no government intervention. The only time when government gets to get intervened into this kind of business is maybe through payment systems. Why payment systems? Because within payment systems, some of them are kind of like regulated by the government. Let's say for telecommunication companies, if you're trying to do things like mobile money or e-wallets, maybe you're trying to convert crypto, payouts into liquid cash, still through mobile money, or you're trying to process a withdrawal through a bank. A banking system is a government system, literally. It is monitored by the government. So that is the only time where the government gets to get intervened. But whilst within the overall trading process, we don't necessarily get to realize the government getting to intervene directly. That is the only way the government gets to intervene through maybe payment options when you're trying to process payments and everything. That's the only time where we may see the government getting to intervene. But then it's decentralized, it's global. By global, like I said, is within literally over the entire world. It's over the entire world, over the entire world. So you can't be trading in Africa similarly as someone that's trading in, let's say, the US. Then being over the counter, this means you do not necessarily need a dealing, you do not need a dealing desk. Okay. You can process your transactions at the comfort of your own home on your mobile phone or the laptop. You know, everything is done by you. You don't really need to go through an office. You don't need to go through an office, let's say a broker's office. You reach at the reception, you make requests, all those things are cut off. You do all the things at the comfort of your own home. Once you processed uh, you know, opening up an account with a specific broker. For instance, in this case, once you open up an account with us at TBS, uh, you make a deposit of your funds. The only thing that's going to remain is you having your mobile phone or your laptop with all the necessary knowledge that you've gathered and being positioned to carry out your trading activities. Okay, so the foreign exchange market is a global decentralized over-the-counter market for the trading of currencies. So some of the instruments that we look into in this case, we're out here talking about currencies. But currencies are not the only instruments that we get to trade. We'll be seeing a couple of other instruments as we proceed within the video. Some of those might include metals. Now, metals fall under the category of commodities. Commodities. So within those metals, we have things like silver, we have gold, we have copper, all those metals. They are all traded. Oh, this is really wrong. Supposed to be metals. Yeah, something like that, I guess. Yeah. So we have metals, then we have other instruments that could be traded. We have things that are called stocks. We have crypto. But then within the foreign exchange market, what we majorly trade is you're going to find that we most cases be trading, um, most cases be trading currencies. In most cases be trading currencies, we be trading metals. So the currencies are part within the foreign exchange market. So all this is Forex. And sometimes within a forex, let's say a broker can at times allow you to trade. Like now, things have kind of like changed. Way back then, you would have specific instruments being traded separately, but nowadays, one broker can have all instruments being traded altogether. For instance, uh, with us at ABS, you can be positioned to trade all these instruments. You could trade a couple of stocks, you could trade crypto, you could trade metals. At the same time, you could trade currencies. Okay, yeah. So who are the participants? So within the participants, we have businesses, we have investors, we have governments, we have investment banks, and retail traders such as yourself. So you, any person that's within this video trying to seek the whole knowledge of trading, you would be regarded as a retail trader. You understand? Once you start trading, you're regarded as a retail trader. The very same way you would see someone having a shop, a local shop. That person is going to be a retail trader of merchandise. We could call him a merchandise retail trader. But in this case, with the foreign exchange market, like we explained, perhaps we are dealing with, let's say, currencies or other forex instruments such as metals that include commodities like gold, silver, platinum, copper. Then we have stocks, we have crypto. Okay, all those things are entirely traded within the foreign exchange market. You understand? So if you're to proceed, how are these transactions carried out? Of course, you get to speculate, the currencies that are available through what we call an online broker. We're going to be seeing that, the overall organogram within this entire business. Who is a broker? Why is a broker really important? Then ultimately using probabilities through fundamental, technical, sentimental analysis uh, to predict the currency's next move, either up or down. It includes all aspects of buying, selling, and exchanging of currencies, predetermined prices. So when we come to that, what you're trying to say out here is that for any business that you're trying to start up, the most important thing you're supposed to do is do some due diligence. Okay? Why are you doing due diligence? You're trying to do due diligence because it's very important for you to do research. You do research or what someone may call an industry appraisal. Okay? You do research or an industry, it's actually an industry appraisal. So with that industry appraisal, what are you trying to do? You're trying to look, oh sorry, industry, sorry, industry appraisal. So for that industry appraisal or research or due diligence or whatever you may call it, you're trying to look out for the key players, okay? Key players in the business. Be it any business, key players, um, you're trying to look at various prices or various commodities that you're trying to get yourself involved in. You know, you're trying to look at what is most expensive. What's the most expensive commodity? Which is the cheapest commodity? So that you can be positioned to balance and identify where you're going to fall in as a participant within this specific kind of market. Let's say you're looking to buy shoes, okay, in the market, for instance. You're looking out to buy shoes, shoes. You're looking out to buy shoes. So for you to buy shoes in the whole, in the overall understanding of business, you would only want to buy shoes when you're going to sell shoes. So if you're going to buy shoes, you'd want to buy these shoes cheaply. Okay, you'd really want to buy these shoes cheaply. So you're going to buy them cheaply. Okay, so you buy the shoes cheaply, and once you bought them cheaply, you can sell them expensively. So you sell them expensively or at a higher price, sell them, sell them expensively, or at a slightly higher price, so you can make profit. Okay, so you sell them at a slightly higher price so you can make profit. You understand? So have you been positioned to do that? You did due diligence, you made research, you carried out an industry appraisal. You knew the various key players, you knew the various prices of shoes, you know which shoes are cheap, which shoes are expensive. You look out for the ones that are cheap, but they have good quality because you've made your research. So after getting the ones of good quality and are cheap, you know, you sell them at a relatively expensive price and you're able to make profit. It's the same way when you come to the foreign exchange market. Okay, so when you come to Forex, what are you going to be able to do? You're going to look out for the various commodities that are being traded. In this case, the shoes. In this instance, you could have currency, you could have currency pairs. All right, you have currency pairs, you have some metals, you know, you have some crypto, any instrument that you want to participate in. You could have stocks. Remember, stocks have their own, like, you know, overall uh, trading, or should I say, platforms and arrangement and everything. But of recent, because of technology transformation, you're gonna have brokers giving out all these instruments to be traded. You're gonna have brokers giving out stocks. You're gonna have brokers giving out crypto. You're gonna have brokers giving out metals like gold, silver, platinum, copper. You're gonna be having brokers giving out currency pairs. So the market we are in is not the market of shoes. It's the market of forex. So the instruments that are traded are these. So within these instruments, you're going to be able to identify which instrument is cheap at a particular point in time. Cheap at a at a particular point in time. So after having identified that a certain instrument is cheap at a particular point in time, then you'll choose to buy or sell. So how do you be in position to identify that it is cheap or expensive at a particular point in time so that you can sell or buy? You're going to analyze. So this analysis, when you go back this other side, is the same way someone does this industry appraisal or due diligence or research. So even in the foreign exchange market, you're supposed to analyze the market. You analyze the market, the various ways within which you can be positioned to analyze the market. You understand? So what are those forms of analysis of the market? We have what you call technical analysis. Okay, we have technical analysis, we have fundamental analysis. Then we have what we call sentimental analysis. Okay, so all these forms of analysis help you to do the industry appraisal or the research or the due diligence when you're looking at the forex market. Okay, so once you've analyzed using technicals, using fundamental analysis, using sentimental analysis, you identify which specific instrument is high, or we could say expensive, or is cheap, or is at a low point of price, is at a low point of price. Sorry, let me just check to is expensive, cheap, is at a low point of price so that you can choose to buy, so that you can buy or sell. It's nearly that simple. So everything that you're going to be covering for the most part will be revolving around this. So we come back here, you know. So all these participants, they have businesses, investors, governments, investment banks, and retail traders such as yourself. They all exchange and speculate on the currencies that are available through an online broker, ultimately using probabilities. Of course, you're never 100% sure, The probabilities that you're going to be using, or the tools that you're going to be using to be in position to identify that kind of probability, are fundamental, technical, and sentimental analysis, so that you can predict the currency's next move, either up or down. When you're looking at up, you're looking at buying. When you're looking at down, you're looking at selling. So it's saying here it includes all aspects of buying and selling and exchanging currencies at current or determined prices. You understand? So that's where we what? You have the forex market, the instruments, you've identified them. Okay, you do your industry appraisal, identify which is cheap so that you can choose to buy or sell. You analyze the market. This is entirely analysis. So how do you analyze? You use various forms of analysis such as technical, fundamental, and sentimental. Identify which one is high, which one is expensive, which one is cheap, which is at low point of price so that you can buy, which is expensive or at high point of price so that you can sell. Okay, so basically that would be that. So if we are to proceed, okay, if we are to proceed, just to give a brief explanation of forex in everyday life, So here I was trying to say forex of FX means foreign exchange and involves exchanging one currency to another. It is as simple as that. Okay, you have one currency, you want to exchange it to another currency, that is entirely forex or foreign exchange. Okay, you have US dollars, you want to have euros, you're going to exchange your US dollars to be given euros. That is forex or foreign exchange. So you don't necessarily need to be a trader to participate in the foreign exchange market. Literally everyone around you is entirely some sort of like a forex trader, literally. Every time you travel and need to exchange some money into a foreign currency, you are already participating in foreign exchange. Then some of the major instruments that are traded, like I was saying, we have currencies, then we have commodities. So some of the currencies we have Euro USD, GBP USD, GBP JPY, USD CAD, USD CHF, Euro NZD, USD JPY, AUD USD, NZD USD, GBP NZD, and GBP CHF. So for the commodities, as I had earlier on mentioned as well, we have metals like gold, we have silver, we have copper. I didn't include platinum, but it's there. Then we have US oil, we have soybeans, and we have wheat. All those are instruments that you can be in position to trade within the foreign exchange market. Okay, so if we are to proceed, just to still give a brief description as to how currency pairs work. So this is how it goes. Trading always consists of buying one currency and selling another, just as I earlier on mentioned. Together, these currencies make up a currency pair. Okay, because any currencies that you're trying to exchange, they're literally usually two, so that makes a pair. So they're saying here, imagine choosing the USD Japanese yen pair. You expected the US dollar to increase in value as compared to the yen. So you buy the one you're expecting to increase and sell JPY, which is the one that you're expecting to decrease in price. So remember that in order to buy one currency, you have to sell another. So if the dollar rises against the yen, you close the position and make a profit. You understand? It's nearly that simple. So what I'm trying to say is that in order to buy one currency, you definitely have to sell another. So if the dollar rises after you have bought against the Japanese yen, which is in this case weak, you're going to close your position and you will have made profit because what you had predicted earlier on has worked out. Okay, so why is forex trading done in currency pairs for the case of trading currencies? Because I said there's a wide range of instruments that you get to trade. So within the currency pairs, why is forex trading done in currency pairs? So we are saying, imagine that the first currency in any currency pair, in our example, for instance, the USD is a potato. So we are trying to have a balance between the two. Remember it's an exchange. We say let one currency be a potato. So for you to have this potato, you most definitely have to exchange another currency. So we're saying let's this represent the US dollar. Okay, so my potato is a US dollar. But now I want to receive what? I want to receive Japanese yen as my current, as my other new currency. So the next currency is a JPY or the Japanese yen. So how am I going to be able to receive my Japanese yen? I will sell my potatoes or my USD to the person that has the USD JPY. Then they will give me this as currency, the USD JPY. So I'll do this transaction, and whoever is giving me the JPY will give me the JPY for my potatoes or the US dollar. So in that essence, that exchange will be Forex or foreign exchange. Okay. So in order to buy a potato, you need to pay a certain amount of the second currency. In our example, which is the JPY. You understand? So literally that's it. So to further proceed, there are three major currency pairs traded most frequently, and they contain the US dollar. So there are three categories of currency pairs. We have the major, minor, exotic. So within the major currencies, we do have the US dollar. The minor currencies, they don't necessarily contain the US dollar. You know, the most active ones may contain the Euro, Japanese yen, and the GBP. So we're going to be having currencies like the currencies that sound or stand out as the major currencies. You're going to have USD CAD, you're going to have Euro USD, going to have GBP USD. They have USD in them. You have USD CHF. So this could be considered as, you know, this could be considered as, let's say, our major pairs. Okay, major pairs. So we have what we call minor currency pairs. Okay, so with a minor, you could have currencies like Euro JPY, could have currencies like Euro CAD, could have currencies like you see GBP, JPY. You could have, let's say, GBP, CAD, you know. So these ones may tend to stand out as our minor currency pairs. But they are all currency pairs that are going to be traded. This is just categorization where you have major, the minor. The major, for the most part, always have USD to them. Then the minor, those are the strong currencies that do not contain the dollar. Okay. Then we also have exotics. So with the exotics, these ones you may not so much hear about, but then in some of the exotic currency pairs, we could have pairs like USD, SGD, it is the US dollar, Singapore dollar. You have USD, could it be BHT? This is Thailand baht. That's the Thai baht. Then you could have what else? We have USD ZAR. Now USD ZAR is the US dollar South African rand. Okay, so I could maybe give that example. Which other one? We could have USD SUF, HUF, the Hungarian forint. So all those are some sort of like example of the currency pairs that are traded. So you have major, you have minor, you have exotic. Okay. So here to give a brief explanation, minor currency pairs or crosses don't contain the US dollar. Most active ones contain your JPY and GBP. Then exotic currency pairs contain one major currency as the base currency paired with any non-major currency, such as South African rand, Mexican peso, Danish krone. They are not so widely traded. So we come to this other concept, and this is where we're most definitely going to start from within our next video. We'll be covering as to who owns the markets that we're talking about. What are they may not necessarily be people who actually own them, but we have some sort of like organization whereby we have people at the helm, which are the exchanges, and then we have that chain going all the way down to investment banks, to liquidity providers or brokers, and then finally you as a person that wants to participate in the market. So it's really interesting, and see you guys into the next video.